What's going on, guys? Welcome back to another video. My name is Aaron, aka The Anxious Investor, and today's video will run over cryptocurrency, something I'm absolutely loving learning about right now. And I'll also run through tax, something I don't get quite as excited about. But nonetheless, it's a necessity. We all have to pay our taxes to fund the much needed public services like the NHS, the educational system, and all the public projects too. But you've obviously clicked this video to learn about crypto tax in the UK, and that's exactly what we're going to run through in this video. So with that, let's jump into it. Now, without too much effort, you can literally jump on the government website and see their position on tax in relation to the crypto space, or what they conveniently now call crypto assets. But very quickly, things get a little bit hazy, or at least for non-tax experts like myself. Oh, by the way, this video is solely for entertainment purposes, and I'm not by any stretch of the imagination a tax advisor. So please do seek professional advice and help after this video. However, let's say you make some serious money trading or even hodling some crypto for a few years perhaps. Then when it comes to disposing of that crypto, the rules state you must pay capital gains tax for the following: selling your tokens, exchanging your tokens for different assets, using them to pay for goods and services, and giving them to others, unless of course it's your spouse or civil partner. But there's more on that in a moment. But the thing that gets me here is the bit that states you might. It leaves things a little undecided. It almost makes you want to say to yourself, well, I might pay my capital gains tax on my assets. Actually, don't say that. I don't want anyone getting into trouble after this video and not paying your taxes. And I know what some of you are already thinking. Some of you are thinking outside the box right now and thinking, well, I just won't tell him. And you know what? Let's be honest. Everyone except myself has had that thought. You see, popular companies like Coinbase or eToro, which I use personally, links in the description below if you want to join, will provide information to HMRC on your behalf. So helpful. But moving on, there are technically two ways of getting involved in cryptocurrency, in my knowledge, from how I see it from a taxman's perspective. Someone who is trading cryptocurrency as a business activity, and someone who is doing it as a personal investment, where you're getting a gain and then you're trading it. Now, with a personal investment, it's a capital gains tax you'll be hit with. And with a business activity side, you will be subject to income tax rules, something to consider and get your head around. And the closest thing I can kind of relate this to, at least for my property people, a landlord who owns a property in their personal name, that property would be seen as business activity, so they would be paying income tax. Whereas if you're trading, i.e. flipping properties, then you, my friends, will be subject to capital gains tax. Now, let's dive a little into the capital gains tax and run through some examples. Because if you have done some quality investments that have increased in value over the past year or maybe even years, and now you want to dispose of them and you want to maybe buy that Lamborghini, then before you do so, you're going to be hit with a tax bill. So make sure you pay it. But before you do that, know that everyone has an allowance. We all have an allowance of up to £12,300 each tax year that we're allowed to have tax free. So if your investment in crypto has gone up £12,300, you will be able to keep it all tax-free. Now, if it exceeds that, and let's say you make £20,000, you'll be subject to capital gains tax for the difference between £20,000 and £12,300, which, if my maths is on point, is around £7,700. That's right, isn't it? Now, one thing you can benefit from if you are married is double your CGT allowance. And using that example of £20,000 gain from an investment, if you gifted half of that to them, and you both benefit from that £12,300 allowance, meaning there's no capital gains tax to pay. Whereas if it was by yourself, you'll be paying on that £7,700, depending on where you fit in the tax bracket. So if you're thinking getting married is worth at the very least around that figure, then get yourself down to that aisle. Now, shit jokes aside, let's move on. Now, the next point I want to talk about is something, again, you out of the box thinkers mentioned to me over on Instagram. Shameless plug. Feel free to follow me over there, guys. Now, you could just sell and buy back again, giving yourself a new value of the base cost, meaning that when prices rise in the future, the capital gains will be judged on that particular price. Well, actually, you can't get away with this, because what this is known as is bed and breakfasting. And rather than bore you about that in detail, there is a link below which explains that in a lot more detail. However, there is a 30-day rule, which, let's say, hypothetically, you sold your crypto at the top of a bull market and you waited 30 days before repurchasing them again. You can utilize potential CGT exemption in that particular case. But again, please do seek professional advice. You see, it's all good and while you making money. And I don't want nothing more than to see all of you become filthy rich and wealthy and smash the hell out of this like button. But let's also be honest, people can lose money just as easily too. And although the government won't pay you for your losses and only put their hands out when you win, there is room for you to write off some of your losses from up to 4 years ago. So if you've been in this space for a while and you've made some losses, there is a thing called allowable losses, which are great because it's not just up to £12,300. Example time. So let's say your investment makes £100,000. You can instantly deduct that £12,300 allowance. Then if you have a spouse, take off another £12,300, leaving you with £75,400. And you would then minus your losses, which let's just say was £50,000 for example. This would leave you with a tax capital gains bill of around £25,400, which sounds a lot better. And on the point of offsetting losses, there is also something else which can potentially reduce your crypto tax bill, deductible costs. Now, there are certain allowable costs that can be deducted from your profitable sales when it comes to your tax bill at the end of the year. And some of these are found on coinly.io under a useful guide, and I'll show you that right now, and I'll also link it in the description below as well. But it's definitely worth either screenshotting or just checking that out as well. And more on that website, as I was going through and I was researching this video, one of the things that stresses me out about crypto is the whole filing of all of your trades. It can get a little bit messy, knowing exactly what you brought, for how much you sold it for, and how you transferred stuff over. It can become a nightmare. It can become a nightmare. Nightmare? What the hell is that? So essentially, what they do is they have some software which connects to all of your exchanges and wallets, and it automates your taxes and basically does the record keeping for you. Now, a final point I want to just mention before we close this is about receiving tokens, i.e. cryptocurrency from employment or mining as an income. These two are taxable too, and you would need to complete a self-assessment tax return if your assets are worth more than £1,000, and you would need to keep records of the following. Now, I'm sure as the crypto space opens up more and more and gets adopted over the upcoming years, as I truly believe it's here to stay, that the government will want to get more involved, and we may have a little bit more clarity in less grey areas. And what I mean by involved is not helping, but having a piece of that pie. And one more thing guys, I want to try and get a crypto tax expert on this channel as well to maybe ask questions that you may have on your minds either before you invest or even if you're investing right now, to really give yourself the right information to make sure that you're making the best decisions for yourself. Because in many cases you can save yourself a hell of a lot of money, not just on your tax bill, but also with the way that you invest moving forward. So if you guys know anyone or can recommend anyone, or if any tax expert in the crypto space is watching this right now, then please do be in touch, because I'd love to have you on this channel to help out all the amazing subscribers who have stuck around to the end of this video. And if you have done that, a like at this point would be really appreciated. If you haven't already, maybe consider subscribing if you find this or any of the other videos on this channel useful, because that would definitely make my day. And speaking of making my day, I just want to thank you once again for sticking around when you guys could have been doing anything, but you chose to spend a few moments with me. And that makes you pretty awesome. So until next time guys, have an awesome day.